where South African investors are putting their money in light of the volatility of markets. The rand was rising at the start of the year due to the positive sentiment around the new president, Cyril Ramaphosa, particularly expectations that he would deliver economic change. But recent data suggests that those issues aren't quite as easy as we thought they would be.
Yeah, they're structural, they're deep, and that's not even considering that South Africa right now has been caught up in the global trade war between the US and some of its allies even, and the future is very uncertain. We couldn't bring this to you earlier this week, so we bring it to you now. We spoke to ETF Strategist and Advisor Nerina Visser.
Most definitely the uncertainty, and I think that's not just a South African phenomenon. It's something that we're seeing around the globe. I think the way that President Trump is leading his country, the trade discussions, the way that he tweets news rather than sort of mainstream news media causes a lot of uncertainty. So generally speaking, I think investors are finding it very difficult to make shorter term decisions. So if you're a trader, it's very difficult to sort of really see where you should be positioning yourself. Fortunately, if you're an investor, a long-term investor, then really very little of what's currently happening around us should concern you.
Well, even if you're long-term, you have to think, do you stay in South Africa or do you look at all those offshore options, which apparently are being talked about a lot, even last year when the JSE actually landed up doing so well. Are investors here or abroad right now?
Both, and they should be in both places. Once again, you know, if you are the investor, you should focus a lot more on what your own requirements are, what you need from your investments long before you worry about where the best investment destination is. You focus on your domestic market because that's really where you live. That's where your liabilities are. That's where you've got to spend your money. But you definitely also include global in your investments because South Africa represents less than 1% of the world's economy, but also of the investable opportunity set in the world. So you would really be, I think, short-sighted to expose 100% of your investment capital to 1% of the investment opportunity set.
Did people actually miss that boat last year, being pessimistic about South Africa moving offshore and then the JSE did so well?
You know, Francis, it depends very much on exactly when you measured this. If you looked at this in the middle of November, it would have been a very different picture than the end of December. And I think what really caught a lot of people unawares with their global investments towards the end of last year was the significant strength in the rand that we saw. And that was one of the reasons also why we saw the JSE doing quite well. But it does mean that any investments that were made in global markets in rand terms underperformed dramatically. So, you know, when you look at it on a relatively short-term view, these things really, it's up the one day, down the next day.
You'll be depressed if you only focus on
Indeed.
a year.
But longer term, you should be fine.
Some people are focused on the short term. Just let's start with, what do you expect of the JSE this year?
So I do think that this uncertainty is going to continue, and it's going to make it very difficult for people to make short-term investment decisions. So I prefer to focus on the things that I do know with certainty and that I can control. And those two things really are making the maximum use of the tax dispensations that you've got available as an investor. And the other one is to say, you know what, let me minimize my costs. Let me keep my costs of investment as low as possible, because it means that after costs I will certainly be better off than somebody who's in a high cost investment, and that makes the decision a little bit easier then.
Okay, so we know you're maybe biased towards ETFs since you work in that field. Let's start by describing, for people who don't know, what's the difference between sort of direct investment, investing in a mutual fund, a unit trust, or an ETF?
So direct shares or direct investing typically would mean that you would buy the shares of an individual company or a number of individual companies. When you're investing in unit trusts or mutual funds, also called the collective investments, that's the way that most people in South Africa engage with their investments. It really means that there is a basket of investments, a portfolio of investments that you would buy, and there is a manager that manages that unit trust or that basket of investments. ETFs sit somewhere in between those because you buy it on the stock exchange just like you would an ordinary share, but what you are buying is not just the shares of a single company, but the shares of a group of companies, a portfolio of investments. So it really provides a very good happy medium between buying individual shares and buying into unit trusts.
So you may have 1/3 of a share in a certain company because you're pooling everything together and then focusing on sectors. So I remember someone explained, so instead of buying the gold bar, you invest in an ETF that's buying those gold
Exactly.
bars, basically.
Because the physical behind that ETF is a physical fund holding either those gold bars or the shares in the actual company. So this is not some fictitious investment. It's still a physically backed investment, but you're buying a share of it, and by pooling it with all the other investors, it means that it makes it accessible also for people with relatively small amounts of money, which is of course incredibly important in South Africa.
Okay, so then those underlying things can be properties, commodities. What ETFs are you excited about?
So certainly the global ETFs, I think that market has opened up dramatically in South Africa. So we can even buy global companies, and I think that's really where we've seen the big growth in the last year. When I say big growth, specifically in terms of the range of options that you've got available. So we can now buy specific country ETFs overseas. We can buy emerging markets. For me, that's an exciting area, especially if I'm buying for the future. I really want to be exposed to where the big growth is. So an emerging market ETF for me is really one of the preferred ones I've got at this stage. Another one that I also like to look at is if it is an investment where I need a good source of income, I would be looking at ETFs that pay good dividends, property ETFs, for example, or just companies that pay high dividends. So depending on what your investment requirements are, you can choose ETFs to suit that particular investment need that you have as an investor.
And what about cryptocurrencies? Bitcoin, is this being linked to that at all?
To some extent, but you know what, there's no cryptocurrency ETF yet. There's been several applications for it to the SEC in America. They've not approved one just yet, but what we do have internationally already are, let's call it blockchain ETFs. So ETFs that invest in companies that are involved in the blockchain technology, which of course is just the major underpin of your cryptocurrencies. So
anything you're excited about, any technology, a country that you happen to like? It sounds very vast.
Yes.
What do the little people do? You know, not the big investors who are just looking at all this volatility, at all these options. What should they be doing right now?
So coming back to the idea of really maximizing the tax benefits that one can get from your investments, the tax-free investment accounts that we've had available in South Africa for just over 3 years now really is the most important and the best way that the little person can invest. And the reason why that is such an important investment vehicle is that you can invest the same 100 Rand that you have either in an ordinary sort of discretionary investment and pay full taxes on that, or you can take that same 100 Rand and invest it in a tax-free investment account and then not pay tax on the dividends, not pay tax on the interest, not have to pay capital gains tax one day. So you really want to maximize those tax benefits that government has given you. And unfortunately, so many people have put that money of theirs into a tax-free savings account. And it really is a waste of that allowance, because the only thing that you're getting tax-free is interest. Whereas in the case of a tax-free investment account, the biggest benefit over the long term is that there will be significant capital gains on which you will not be taxed.
Well, of course, that reminds me, Francis, of that old saying that if you do what you've always done, you get what you've always got. And there's been really a raft of bad news, information that's been coming out of the markets today. 80% we're hearing from the Minerals Council of South African gold mines now unprofitable. Of course, we're also being told Eskom is approaching a coal cliff. So the JSE performed marginally okay today, remaining flat really at the end of the day. The Rand will be affected, though, by reaction to that rates being kept flat. So
I was just looking in Bongani, it seems like the reaction has become more extreme since about 5 o'clock this afternoon, and the Rand right now 2.5% weaker. And maybe, you know, the interest rate being steady, that was expected. Of course, the market would have liked an interest rate hike. Now that makes the Rand more attractive, our interest rates in South Africa more attractive for investors. But possibly what's going on here is what we showed you as the number of the day, 1.2%, a dramatic cut in the growth forecast, and that raises a whole lot of concerns about the economy. But
also the Reserve Bank telling us today that we can expect maybe as many as 5 increases leading towards 2020, about 25%, 25 basis points expected for each. Previously, 4 had been predicted in the same period. So who knows? All of this could change. It's a moving target.
Let's take a look at how it all panned out. Right now, the Rand pretty weak. Here's a look.